Sometime everybody is. Our next guest, writing recently about his concerns that many young people are investing like they're gambling, which he says is a warning sign. For more on that and on the markets, let's bring in Ron Kruszewski, Chairman and CEO of Stifel. Good to see you. It's been a while.
Not that long, but been, yeah,
I could,
a while, I bet.
Longer than we like.
The opportunity, speak for yourself. No, the opportunity, I was looking for you out in Utah. All your minions were out there, and you weren't there. But okay. So the opportunities for gambling are everywhere. I'm not sure what you're talking about here. Prediction markets, DraftKings, crypto.
Well, it's all of it, but, you know.
Options. I just heard of perpetual futures.
Well, you know what? Zero-day options and perpetual futures were the beginning of this, and now you have prop bets and prediction markets. And my concern is that if you can pull an app out and in one sleeve buy stocks, which, by the way, if you buy a stock, everyone can win. You're investing in the U.S. economy. They're going to be a loser. Right. Or you pull it out and you bet whether the coin toss is going to be heads or tails. One is compounding. Investing is compounding, and gambling is consumption. And they are completely different things. And if we, as a society or us as an industry, we need to educate the difference because this has been a gray zone, regulatorily, taxes. These prediction and prop markets are getting a little out of control.
I share your concern with this. But we also sound like old fuddy-duddies who don't want these new ways of bringing new consumers in. Even the SEC chairman who we had on yesterday said it's all manageable. It's so that after so rudely.
Casinos just called us, and they tried to shut us down.
Shut off the signal.
Completely.
DraftKings. Probably your PowerPoint. You had an AI surge taking down the power.
I don't know what that was, but
so go ahead. What you were saying was.
Well, no, I think that look, if you get a teacher and kids saying that the way they're going to save in their 401k is through gambling, I assure you that we're not fuddy-duddies. Okay, gambling is consumption. You bet one way, I bet the other. The house takes
it's a zero-sum game.
Well, not only a zero-sum game, it's negative return.
It's negative, right.
Yeah. So I think, look, I don't want to be a fuddy-duddy about that, so to speak, but I do think that when you have parlays and bets and so easy and dopamine versus compounding is boring, dopamine's exciting. We, as an industry, need to make sure that investing and gambling are different. You want to gamble, go to Vegas.
What do you think of Robinhood?
Well, I think they're mixing the lines between gambling and investing, and I think that they can run their business model. I could put prediction markets up on our app. I'm not going to do it. That's not what we do. We can open a casino too, so we're not going to do that. We believe that our job is investing. Can you imagine $105 trillion of wealth running through the casino? Everyone talks about the wealth transfer. Don't run that through the casino.
It's the rationale or the motivation for gambling is hard to understand because the house wins. We know that. Look at the buildings in Las Vegas.
Well, Joe, it's entertainment. It's dopamine.
It is entertainment.
Hard.
You never end up fulfilling your dreams for why you're gambling.
Well, let me just get in Missouri. They passed it December 1st.
Yeah.
And one of the apps, I won't say which one of them, put $300 or $400 in everyone's account. Everyone's account. Now, that's a moneymaker. That's not that's like safety.
It's called a loss leader, a customer acquisition cost.
Well, you can say it's a loss leader. It's if you've got $1,000 in your pocket and I give you $1,300 and then you go bet, now you have zero. They made $1,000, so less than $300. Let's just call it what it is. It's gambling, all right, and right now it's the Wild West of markups.
So that could be a sign of maybe problems maybe in other areas, but why don't you tell us how Stifel views the current economy, the Trump economy, the Trump stock market, for lack of a better term?
Look, the market has outperformed almost.
The AI market?
Yeah, I mean, the fundamentals, markets kind of outrun the fundamentals a little bit.
You think so?
Well, look, I have a very simple measure. I've done this for almost 30 years, and I'll look at the nominal equity risk premium. And so when I see the market trading at 25 times earnings and the 10-year at 10%, my valuation bells go off, okay? Because the yield is equal to the 10-year Treasury. You're supposed to have an equity risk premium. Everyone's saying it's different this time. Reminds me, we're building a data center on every corner. I'm surprised there's not 4 of them going up here. That's driving the market right now. But I tend, at these valuation levels, to be a little more cautious.
Okay, what about the underlying economy in general with the big, beautiful bill? Is that positive? Is deregulation positive? Is $38 trillion too much that we owe? I mean, where are you?
Well, first of all, the big, beautiful bill, one of the things that people underestimate is immediate expensing. That spurred a tremendous amount of investment.
Tariffs?
The tariffs are, to me, the tariffs are a policy cudgel. It's not really economic. It's used to get policy things done. You don't do what I want. Well, how about 150% tariff? That tends to get the people to the table. So tariffs are a little more.
Is it all going to work?
What appears to be, doesn't it? It does.
Asking you.
But right now, it is. Listen, give the administration some credit for getting some things done.
And you think that the reset on global trade eventually will bear fruit for jobs here in this country? Is that
I do because I think the trade imbalances went too far. I mean, the United States, our job is to subsidize our own business. We subsidize our suppliers, other countries who pump business our way. It's done in business all the time. If you cut off your suppliers, you might hurt your economy. So tariffs got to balance here a little bit, but they will. I think I'm optimistic. But that said, the market's highly valued here, and I would not be surprised.
There are parts of the market that aren't at 25 times earnings. And even NVIDIA is growing so quickly that you can't even assign a multiple to it because you got to assign a different one tomorrow to it, right? It's not, compared to .com, NVIDIA is not, number one, it's making money. Number two, the multiple is, what is the forward multiple, 35?
I know, but you've been talking about this. I do look back. History repeats itself.
You could have been negative on NVIDIA since it was $1 trillion, and it's now $4 trillion.
I think it's 4.3 or 4.4.
Yeah, if you told your clients it was expensive at $1 trillion, you misled them.
We didn't. Well, we didn't say it was that, but $1 trillion is a lot of money. Okay, and people don't realize that. Yeah. I always I always quickly say your investors won't know this. If you spend $1 a second.
Yeah.
$1 a second for every year. You know how long it takes to spend $1 trillion? 32,000 years. It's a lot of money, and the valuations are stretched here. I mean, I don't think anyone that's been in this business a long time is going to argue.
So you should sell everything then?
Of course not. You can't do that. You've got taxes. You should plan.
You're only not selling because you have taxes.
Well, no, you got to take that into consideration for sure.